All right, recently we've seen some big upward movement in the prices of crypto assets. We've obviously seen Bitcoin and ETH, and then we've seen others like Solana and Chainlink and a few other crypto assets really take off and grow even more so, grow more than 100% in the last couple months. Now, it would seem from someone on the outside that this is very institutionally driven, meaning it's very much driven by the fact that there might be a Bitcoin spot ETF soon, that an ETH spot ETF was applied for by BlackRock, and that's bringing everything else up. And that is part of the case. Obviously, there's a supply and demand component for Bitcoin, there's a supply and demand component for ETH, and that is driving some of the price of all crypto assets. But what we really need to see is under the surface in this bear market, in this time that crypto has, it went from its high of around 69,000 all the way back down to 15,000. And I'm talking about Bitcoin prices, and everything else, really collapsed in price during that time. And we, had some really bad things happen in the crypto world. But keep in mind, there was so much building going on. We've gotten to the point where there is actually use cases where companies the likes of BlackRock and JP Morgan and all these other banks, Deutsche Bank and Citibank, are all starting to utilize blockchain technology. Visa, PayPal, Shopify, all starting to utilize blockchain technology. Nike, Lufthansa, Starbucks, all starting to utilize blockchain technology, and not because it's a fad and not for crypto assets, not because they want price to go up, but they see that it's a better technology. All this building that has been going on. I mentioned Solana, which has gotten some of their negatives in the past maybe and has really started building some really good applications. Chainlink, which has built this CCIP, this cross-chain interoperability protocol, allowing banks and other custodians, different chains, to coordinate with each other. These are huge undertakings, and this is really good for the ecosystem. It's really good for the technology. And so when you look at the likes of, again, BlackRock, JP Morgan, Nike, Lufthansa, Starbucks, Visa, PayPal, they're looking at what's happening behind the scenes and making these decisions to jump into blockchain technology and to jump into crypto. Again, not because it's a fad, not because the price has gone up, but because they see what the technology can bring, and they see what's going on in terms of application development, in terms of protocol development, infrastructure, all of those parts that are going into it. And so we might see on the surface is very much driven by the thought that there might be a spot ETF. In reality, the fact that there might be a spot ETF is driven by all the growth in infrastructure and building and value that's been going on for the last couple of years. So if you're thinking about getting in and you're thinking, okay, well, once the spot ETF is approved and the price goes up, that's it. Keep in mind that the idea of these companies investing in the technology, either utilizing it themselves or creating funds around it or something to that effect, is because they see the value in the technology. They see the value in public blockchains. They see the need that we will have to transact financially on chain, and they're building for that. And that's, in the long run, will continue to drive the price, and what has driven this potential for more institutional investment right now and more institutional adoption later.